Ranisha Chenani, who is a commodity analyst, capital markets, Edelweiss Financial Services, joins us on the show from Ahmedabad. Ranisha, thanks very much for speaking with us. The most important question right now is how to play gold during Akshay Tritiya.
Hi, I think gold, which has been in a bull market from last 12 years, and I think that bull market is over, or at least has come to a halt. So I don't expect great returns coming in for gold for this year if you're investing for a particular reason of Akshay Tritiya. Yes, if somebody wants to invest it as a token amount or a token investment, they can do it, but not great returns are expected. We are expecting that gold could end this year in the range of something around 1500 to 1550 at COMEX, and at MCX the range would be roughly 23,000 to 28,000 for a few months to go. So currently prices trading around 27,000, you would not get much returns, and if you want to buy, there would be other chances coming in later during the year, and one could invest around 23,000 to 24,000 to get some returns for this year.
So Ranisha, are you saying that one should avoid the temptation of buying gold on Akhatij?
Yes, I said that one could buy as a token amount or a very small amount or as a SIP, but I would not recommend buying a lump sum amount of gold at this prices, because the upper end or the upper range which we are expecting is around 28,000 for this year. So returns would be very much minimal. If you are investing right now, it would be roughly around 2 to 3%. So it is better that you wait for some time and invest at a lower level, something around 23 to 24,000.
Why is the demand for physical gold so strong? You call up a jeweler, you call up a bank, they pretty much are running out of all the physical bar or the gold coins.
Yes, we have seen that as prices have fallen something 15 to 20% at MCX levels, and internationally it has fallen more than 20 to 25%. Physical demand is very much strong, so this is the only reason we are expecting that prices would hold at this range. But otherwise, if you look at the investment demand, it is very much waning. If you look at the ETFs outflows, it has been roughly 400 tons of outflows in the world ETFs. So the temptation to buy gold has somewhat resided, and downside risk has come more, and I think upside catalysts have resided. There are a few factors that has affected the sentiment in the market. The first one is the growth of US, which is somewhat improving, and there are talks and speculations in the market that QE is going to end very soon. So this was the only factor which pushed the gold prices higher from last 2-3 years, and QE coming to an end would definitely be a trigger point when prices are coming down. So I think not much returns expected.
Right. Even so, Ranisha, just a quick word on the kind of interest you're seeing in gold ETFs versus gold funds right now in the market. In comparison to buying physical gold, how are the trends panning out?
See, overall, I said that there is a tug-of-war going on. One side, we are seeing good physical demand at the lower prices because people were waiting for the prices to correct, and other side, we have this investment demand waning. Central banks have been a good buyer of gold. We have got the data till March quarter. So central banks are still the buyers, but we get to know what they have done in April, because April was the month when we saw prices coming down so sharply. So we have to wait what central banks are doing and wait for the data to come in. So we don't know what central banks are doing. So still a tug of war and very much indecision between the physical market players, that is the retail investors, and the investment players. So our view is that we are expecting somewhat another leg down in prices, and a new low might come in, something $1,250 to $1,300 at COMEX, and at MCX roughly we could bottom out around 23,000 to 24,000 this year.
Final question on silver. Do you think this year silver could crack below 40,000?
For silver, we are expecting the prices to trade in the range of 40,000 to 45,000, and 42,000 is a very strong support for a time being now. So till prices are trading above it, I don't expect prices could fall below 40,000. So yes, as I said that there is downside risk for gold. If gold will create a new low, we could see silver also breaking the previous lows. So if 42,000 is broken, next support would be 40,000, and if that is broken, then yes, we can see prices something like 38,000. But still, we are in a wait mode for silver.
All right, Renisha. Appreciate your time and thank you for your insights.